Hello. This is Pluto here. So this is a very detailed guide on how you can find draws on liquidity pretty fast when you don't know where the price is going. This works with or without a bias also. This is very consistent. It involves using inversion fair value gap as your entry trigger. You can do this on the 5 or on the 2-minute time frame. So the first thing you want to mark out is the highs and lows before 9:30. So you mark all the highs and lows. It's typically gonna be like one high or low. So anything before 9:30, you want to mark the high and lows. Starting from midnight, when midnight opens right here, you're ignoring all of this. We start here. So London high or low. That's what we're focusing on pretty much. And once 9:30 hits, the market is gonna either take sell side or the buy side. In this case here, the market dropped down and took out sell side, which is London's low. The moment the market does that on a 5-minute time frame, right? The moment it does that, you want to drop down to the 2-minute. You could do this on the 1-minute also. And what you're waiting for, since we took out London's low, which is sell side here, we want the market to come back into the range. So you want to wait, really, like wait for it, and like one of those type of candles. So once you see this, you look for fair value gaps that's opposing, that's supposed to go to you're looking for bearish fair value gaps. Since it dropped and take out London's low, you want to look for bearish fair value gaps 1 2. You want them to become inverted. So this becomes an inversion here. So this is a bullish inversion fair value gap. That means this is a long entry right here. You have another one here, another one right here, bullish inversion fair value gap here. If you don't want to take this one as your entry to go long, you could take this one. So your entry will be as soon as this candle closes and this becomes inversion, this is your entry right here. On the next candle open, once the moment it opens, it drops down a little bit, you want to enter, stops below this low. Or if you entered off this one, that would have been like, that's you might want to put your stop below here, because this is a very huge entry. But you could have ignored this and just take this instead, because this is more safer, because you can put your stop somewhere safe. So I would have entered on this one, entry right here, stop loss below this candle's low, and then you want to target the opposing high, which is this buy side, or you can even target this as your target. But in this case, we're targeting this as our take profit. So the moment you enter here, your entry triggers right here, stop loss down here, you're targeting this high, and that would give you a what? What's the ratio? A 1 to 2 risk to reward ratio you would have gotten right here, for a total of 100 points, 99 to 100 points pretty much. And this happens, it's like this has been very consistent compared to like the waiting for a fair value gap to get played in and for market take to go higher. And even then, if you miss this entry point right here, you could have waited for another one around the 10 o'clock hour. There's another one right here, another inversion. But you know, but that's a continuation model right here. But this one is this strategy is mainly for like as soon as market open. This is very momentum based. Like price action is gonna be like moving really fast. So you really have to pay attention to catch it. And it's very consistent. Like I have a few data I can show you. I'm going to my Discord real quick. Um, Simple size. You see? Same scenario here. That was the one that I showed you guys earlier. We have another one right here. Highs, low, market open. We swept the highs. We swept buy side and we displaced back into the range. Inversion fair value gap right here. Also, there's also a 5-minute fair value gap right here. So as soon as price came back and retest that inversion, that's your short. Target sell side. That's only 5-minute time frame, by the way. And that would have been your trade, and you're done for the day. Another one right here. Buy side liquidity, sell side. Prior to 9:30, we swept this low, displaced right back up. We inverse this 5-minute. Your entry is right here, and then you target this as your take profit. Your entry here, stop loss below this low, or you could put your stop right below the inversions fair value gap low, and you let the market do its work. And that would have been your TP. That would have been a winning trade. Here is it right here again. Buy side liquidity, sell side liquidity. 930 opens up. This is a dash line. We drop down. We took out sell side. It comes back up into the range. What's this? An inversion fair value gap right here. There's one here. There's also here. You want the one that closes the full thing. So I would have entered on this one. So right here, so as soon as this candle closes, you enter here, stop loss below this candle right here. And then this is your take profit is this high. So as soon as this candle closes, you enter the trade, stop loss down here, your targets right here. That's like probably 100-point run right here. Market ran for 200-point that day, by the way. Inversions are very consistent. Like, it's very, very consistent. Even here, same scenario here. We opened up at 930. We took buy side liquidity. We displaced back inside of this range. We inverted this 5-minute. Your entry would have been right here. Stop loss above this candle's high. Take profit this low right here. It would have been hit. At this time, this was an over 100-point run. It was just that the range we were so range bound. That's why it looked very small, but it was a lot of points. You want to, like, with this one, you would want to like de-risk a lot because at that time the market was ranging, but it was still a winning trade. Even in difficult markets, it still works the same. It works the same. We have buy side here, sell side here. Anything prior to 930 is buy side and sell side. Even though like this was already swept, so we're gonna use this new one because it's prior to 930. So market was dropping, 930 market's dropped. We took out these equal lows right here with this candle, and we came back inside of this range. We traded around for a little bit, and then this candle right here, as soon as this candle closed up there, that was an inversion. Came back and retested inversion. This was a very like difficult day to trade too. I took this long, target this high, but in a day like on a day like this, you might have gotten stopped out, but you know, this was still a good trade. It was just one of those days where it's like it would have made you very uncomfortable if you were to take this trade. And we have another one right here, same thing. Buy side liquidity, sell side liquidity. 930 opens up. See that dash line right here? That's 930, and this is 10 a.m. 930 opens up. We swap out buy side with this candle right here. Boom. Swap out a singular high. Displace back inside of the range. What is this? An inversion fair value gap. We're above midnight. We're above 8,200 premium. Inversion fair value gap. But you want to take the full inversion, which will be this one. As soon as this candle closes, we inverse this. Your entry would have been like, as soon as this candle closes, your entry would be like right here. Your stop loss above this candle's high, or above this candle, the inversion candle's high. That's where your stop loss is. And you target opposing liquidity, which would have been this sell side right here. A very obvious target, over 100-point run. Beautiful trade on the inversion entries. I'm telling you, it's insane out there. Even if you were scared to take this, you probably could have waited for this entire range right here to inverse and then take a trade right there when this candle's close to target this low. Here's another simple size right there. We opened up, sell side, buy side was up there, but it was like one of those days where it's like it was so far up. But we did take sell side. We came back up into the range, and we inverse this candle here. This was a very difficult day too, and even then, you still would have been a winning trade. But since it came back and inversed this, and this candle opened up, hits this fair value gap that was in here, but you could have taken an inversion buy, but it would have been very uncomfortable though. Very uncomfortable day to trade this. But nonetheless, like, this works. It's pretty consistent. Like it's very, very, very consistent. It doesn't happen every day, but you can find this setup almost like at least 3 to 4 times a week. You can find this setup. You don't have to try and trade like exact fair value gaps like these all the time. No, you can still use that. Because anything, remember, inversion fair value gap is basically a change in the state of delivery. When we have an inversion fair value gap, which means price is going to go the opposite direction. That's what inversion fair value gap for. So it's more consistent than the regular fair value gaps, because it's immediate. It tells you like, okay, we're no longer going lower. We're just gonna go higher now. That's why it's like very, very consistent. And you can just frame your setup around this. Literally, midnight open. You mark out midnight open. I already have it automatically marked out, and then highs and lows pre 9:30. Look at the highs and lows on the 2 minute or on the 5 minute time frame. Any highs and low pre 9:30. That's what you want to mark out. So 3 a.m. lows, and then those 7 a.m. or London or the earlier. Any highs or low that has not been swept, when price will be like ranging inside, but there's obvious high and low, and price is like moving sideways, like here before 9:30. Just wait for price to take one out, and as soon as it takes one out, wait for it to come back in the range with an inversion. Sometimes on the 5 minute, it's not gonna show you inversion, so you want to go to the lower time frames, like the 2 minute, so you can find the inversions, or the 1 minute, because those you can find it very easily on those time frames. Even if you go to the 1 minute time frame, even I think the 3 minute too. Even on the 3 minute, you can see the 3 minute time frame works pretty well too. You can get it on the 3 minute too. Look at that inversion right here. We swept it, inverse this right here, and you could have taken the long for this buy side. So you have to like go down the time frame so you can kind of see the Ferrari gaps. Because remember, fractals, it's the same thing. It's the same price. Even the 2 minute, 3 minute, even on 3 minute here, that would have been a nice entry. As soon as this candle closes all the way up here, you buy it. Literally, as soon as it comes back up and close, you buy it, and then you target that. And that could just be a one setup that you hunt every day. Mind you, it works with or without bias, because all you need is to know where the drawn liquidity is. That's all you need to know, where the market's gonna go, and you just target the opposite liquidity for you take profit. So you don't have to have a bias every day. You just need to know where it's gonna go. That's the main idea with this. It's very, very, very consistent. And I have more setups on this, like more in a different folder, because I've been like testing and looking back at events where this occurs. Because I used to only trade like Ferrari gaps like these, but like a lot of the time I'm missing out on setup on inversions, so I've been using inversions a lot with like highs or lows, instead of like trying to be focused, like instead of like focusing on buys only, just look for the drawn liquidity. That was like the main thing, and that's gonna like multiply the your setup and your trading like really, really fast. But yeah, that's it for today.